I've asked you the private question for years, and you finally did it. What led you now to decide to take Continental private?
Well, the timing was certainly right. You know, a lot of companies hadn't been paid in the market for being public, particularly since COVID-19 hit in 2020. And we've always said that any time we weren't being paid to be public, we'd go private. And we're one of those unique companies that could do it due to our ownership, and certainly have. But Alix, I think if you looked at the, you know, we call it a herd, all the publics, if you will, the herd size has been dwindling. 5 years ago, there was about 50 public companies out there within energy, our peers. And today, that's now down to about 25. And so that's been going on a long time. And if you also look at the activity, I'm talking about the drilling activity that's going on in the field, you see a lot more of that being done by private companies. And today, that will approach or be slightly over 60% once you add Continental's activity in. So it's been changing, and
well, Harold,
quite some time.
So let's get to that. Add Continental into that. What's going to be your net new spend, net new production, as you're able to take advantage of being a private company?
Well, I think the primary outcome is going to be that, you know, we continue to do what we've done, and that's produce for American energy, for American consumers and world consumers as well. So that's what we're going to be doing for an awfully long time. So it's not going to change a lot, and we're not going to be picking up a whole lot of rigs or changing their activity level at this time. So, you know, as we move forward, but we'll be free to do it.
Right.
So that's the big thing, is the freedom to do it without a group of analysts directing which way we go from Wall Street.
So you have the freedom, and you can choose if you want to. If tomorrow you wanted to ramp up production and ramp up CapEx materially, could you do that? Are there the resources, the labor, the sand, the frac crews to be able to do that tomorrow, for example?
You know, we could. You know, there's you never run out of sand, and I've said that several times. And people are coming back to the industry over time. You know, since COVID happened, and it's taken some time to regain that talent. And you know, you can build rigs and equipment, but so you can do it. And companies like Continental has a lot of resources, and we could ramp up if we needed to, and if the market was there. So we'll be monitoring supply and try not to oversupply the market, and provide the supply that America needs. So
talk about the signals, Harold. If you don't have to worry about pesky shareholders and analysts, you can just focus on the market signals. What's the market signal right now when you have oil around 80, a forward curve doing some weird stuff on the front end? What's the signal for you?
Well, certainly, Alix, there is some signals out there that's pretty disturbing right now with what's going on with Venezuela. For instance, we call that kind of a move of desperation on the oil supply side with the Russian-Ukraine situation that's going on. You know, just to think that, you know, we're lifting the sanctions on this communist country that's they're hoping to bring more oil to the market. And it probably will. There's the black market that oil's being sold into, so it'll probably be redirected for a little bit, coming out of China and India. But I mean, that's going to take a long time to ramp production up down there. Those plants are stripped. You know, you have to have refineries down there for that bitumen, tar, and you have to have somebody willing to take rigs back down there.
Yes.
They still hadn't been paid for the rigs that was confiscated, the frac crews, frac equipment, and all that.
Harold, you're
so
absolutely right.
Go back quickly.
And that's what Mike Worth of Chevron said, too. Like, it's going to take a while. So in the meantime, what oil price does Harold Hamm say, all right, guys, let's go?
Well, I think that we'll see prices strengthen somewhat from where they're at coming in 2003. That's what crystal ball says for us, but it is a crystal ball, and it's hard to read it all the time, and we do the best we can with it. But anyway, it's the world's not awash in oil. Mm-hmm. We have to keep in mind that the U.S. is the only place that has spare production capacity in the world.
Yes.
And so this thought you can run off to Saudi Arabia or somewhere else to get it, that needs to end. That's untrue.
Harold, before I let you go, public policy has been very difficult for oil producers to wrap their mind around in the different administrations. And I know you've been a very strong supporter of President Trump, and he said he is running again. He's also come under a lot of heat recently and a lot of controversy. Is there another Republican candidate that you think would be better to lead the party in the next election that would help you and your business grow more?
Yeah, there's a lot of great candidates out there, and certainly they have the right view on energy and could very well lead the party in regards to energy and bring us back to an era of abundance. That's where we were 2 years ago. So in 2 years, we've gone from an era of abundance to an era of scarcity, and in fact drew down the SPR, which was meant for emergencies and warlike conditions. So we're kind of vulnerable right now. Mm-hmm. They halfway drained that. So certainly there's an awfully good group of candidates that I'm aware of, we're all aware of them, that could lead the party and do a very good job on energy.